This is your Mortgage Rate Watch for Wednesday, June 8th, and I'm Keith Akada with the Mortgage Reel. After yesterday's comments from Chairman Ben Bernanke on behalf of the Federal Reserve, it was taken by the overall in the markets that he is now being perceived as the dove on inflation. What that really means is when they're dubbed a dove, or dovish, excuse me, they believe that inflation will not have, or at least will have a minimal impact on the economy. On the opposite side, had they said that his comments were hawkish, then that would mean that they have more fears that inflation is going to pose a serious threat to the economy. Now, during prior to yesterday's speech, we had the auctions on the 10-year notes, which received a B grading, and then shortly after the federal Ben Bernanke's speech had concluded, the market did react with a positive. And we're continuing that positive note this morning, and that's helping to impact interest rates and slightly lower rates at this time. The 10-year note auction just went off, and we're receiving a solid B rating. This is again on yesterday's short-term notes with a solid B rating, and this is probably going to turn into and transition into a possible price improvement or midday price change from lenders. So now we're again having more fuel to the fire to hopefully break through that ceiling and pressure interest rates to the next level and bring them down slightly more. If you're looking at the bond page this morning, you'll see that we have transitioned into still some of the best levels of 2011. However, that's not necessarily translating on the interest rate side at this time. What's very interesting is that we're in a kind of a pickle at this moment. Really what the overall economy, the global economy is looking at, all analysts are looking at, is if the economy is truly slowing or if this is just a bump in the road during a slow recovery. Now, where this is really being fueled from is a ration of jobs reports coming out much lower than expected, job creation is coming much lower than expected, and that's really fueling this whole speculation. Now, should this start to turn and improve of what they're really looking for is in the third and fourth quarter, then it will show that the economy was just at a point where it was just a bit sluggish at that time. Make sure to leave any comments, feedback, or questions below. We'll make sure from Team Mortgage Reel to get back and answer those as quickly as possible. We have a special request we'd like to make before you leave, and hopefully you've enjoyed today's clip. Make sure to check on the home page. Click on the banner at How to Beat the Banks, and that'll take you directly to our Facebook fan page. We definitely put out more and more information and to create transparency in the financing process of home ownership. We're big advocates of home ownership, obviously, but we want to make sure it's as easy as possible to understand what's impacting and the education necessary for home ownership today. And when you're visiting us on Facebook, make sure to like us when you're there. Thanks for tuning in to your Mortgage Rate Watch. We'll be back with more news impacting your largest investment, your home.